Welcome to Investors Insights, episode 178. Today we'll be discussing the Fed. This week is all about the Fed. So for our video watchers, we invite you to try listening to the same information on our podcast. Many people are discovering they like listening to it while they drive or exercise. So links can be found on the right of this video. With that said, let's get started.
You're listening to Investors Insights with Greg Powell and the Portfolio Strategy team from 5 Plan Partners.
Good morning, Ashley.
Morning, Bobby. Good to see you.
A busy week.
Yes.
Trey and Greg are at client meetings this morning, so it's the two of us. A lot to cover. This week is all about the Fed. So the past couple of weeks, it's been about earnings. This week, it's about the Fed. So Janet Yellen, the Fed governors, are meeting in Jackson Hole, and Janet Yellen will speak and have a conference on Friday. A lot of eyes will be on that. So to see what she says, there's a lot going on with the Fed. A few months ago, we were thinking, okay, there's no way they raise rates. But actually, some of the information that have come out recently, we might be closer, probably December. She might come out Friday saying September's on the table. We'll see. But a few things that we're looking at. So one is housing. Yes. Housing continues to be a strong point. There's actually a report coming out tomorrow on Tuesday that might show that housing's at an 8-year high. And then also inflation. The Fed's inflation target is 2%. We're very close to that. And then jobs. Jobs continues to be strong, trending in the right direction.
Yes. So
the Fed can say, they've got some ammo, but then also they've got some headwinds with the Bank of England going lowering their rates, and then with all the negative rates around the world, the negative rates around the world going down, and then the Fed raises, that might throw off the currency. We might have a currency war. So a lot to go over. So Ashley, talk about that and talk about the tools that the Fed has.
Yeah, it's the Fed governors and Janet Yellen are walking a pretty narrow path right now. Bobby just mentioned on the plus side to raise rates perhaps, plus meaning going up. I mean, not necessarily good, but going up. On the plus side, Bobby just shared with you that data. Part of it is problematic, and they do have such a narrow window, is that you can't lower anymore. Bobby and I were looking at some research on this, and if you go back to the early 1980s, we've had 4 major economic downturns prior to 2008. In each one of those, the Federal Reserve had enough interest rate room to cut, that they dropped the interest rates 5% or more all 4 times. Now, they didn't do it all at once. It would be a quarter point here, a half point there, but they've gradually got there. So our monetary policy in the past looked like that, and that's what we were used to. It's what the Fed was used to. Now, of course, we've been in the world of quantitative easing. You don't have much rate room to go down. So really, your only choice with that is another round of quantitative easing tight. The other option on the table is negative interest rates, but I don't think they entertain that. That has not worked well in Japan. That is really the major nation that has tried it. But the other thing that we want to share with you is that I think even the Fed is getting to the point they feel like they need some fiscal policy help. As we all know, when you put monetary policy, the Fed, plus fiscal policy, government spending, that's really where you've got the most powerful tool. And Stan Fisher, who's the number 2 guy at the Fed over the weekend, basically said, look, you policymakers, we need some help with this. We need some tax reform. We need some infrastructure spending. We need some other things that will push that to help. So like everything else in the financial crisis, they've had to learn a new normal to work with. And I think that's the other reason you see so much discussion now, too, that we didn't have before.
Yeah, when the Fed raised in December, we fell 12% in January, one of the worst Januaries on record. So we're watching this very carefully to protect your downside. So thank you for watching. Please let us know if you have any questions. Call us anytime. We love discussing the markets. Have a great week.